right, so we got news. We got news on news.
I know. Amazon for fucking Whole Foods?
BlackBerry got some money this morning. Chris, I didn't see you. What up? Thank you. Uh, Chris, do you have any technical problems the last couple of days? No, smooth except for on Monday. uh, Swing. Oh, Tesla is a Ponzi scheme? What? Do, 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 do.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts Joel Elconin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I will buy the stock for a penny.
with everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Wednesday, April 12th edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we're going to talk about Amazon having made an offer for Whole Foods. Interesting. Trump's travel ban has been hitting the hotels. We now have the Marriott CEO on record as saying so. We're going to talk about this BlackBerry news this morning, and the fallout continues in the airlines. Also helped out today by Delta's earnings report this morning, and some ratings to note. Pepsi, Hog, Lululemon, HPQ, Rent-A-Center, all getting upgraded this morning as well. Our guest will be at 8:35. He's J.C. Perrette, the author of All-Star Charts. Joel, how is your morning going? How are the markets doing?
Morning's a little rough here. An accident on the lodge, but I wasn't involved here, safe and sound. So thanks for setting up the show. S&P futures are in the red by 3 points this morning. Nice comeback yesterday. The pre-market high, 56.50. Couple points off the pre-market low of 45.50. Crude still staying in the $53 handle, up 19 cents at 53.59. Gold inching its way towards 1,300, 1272.30, up a buck. And silver in the green as well, by a dime at 18.35. So I guess I missed a big news morning.
There was some news here. I mean, there's been a couple earnings reports here. We're going to get the big start of earnings report tomorrow, obviously, with all the banks reporting there. Had some BlackBerry news. They're getting some money, it looks like, from Qualcomm. There's been some more rumors in Whole Foods. So we can go anywhere you want there, Joel. Or maybe Spencer wants to take the lead. Where do you want to go first, Spencer?
I guess we'll start with this BlackBerry thing. This just broke about
Sure.
5 minutes ago, maybe a little more at this point. So BlackBerry was halted.
Is it out of the halt now?
News pending. The news is out. The halt ends at 8:15. They were awarded $814 million in arbitration against Qualcomm.
So Qualcomm getting a little bit of a hit on this, and sometimes when you have these awards, it's just first thing I usually do is go and look at the market caps. If you've got that in front of you, Spencer, we can have a race here. But first, you look at the Qualcomm market cap, and you think, well, okay, 800 million. Okay, so what their market cap is Spencer, are you beating me to it? QCOM market cap is 83 billion. So it's a drop in the bucket, less than 1% of their market cap. Now, BlackBerry could be a bigger thing because their market cap is a lot lower. All of a sudden, you get 800 million. And it could be some appeals here, too. So you can't just automatically tack on 800 million and say, okay, well, it's a $4 billion company, 800 million, it's going to be worth 20% more. Because there always seems to be appeals. But that's, quickly you can see how this settlement's worth a lot more to BlackBerry than it hurts Qualcomm just because of market caps.
Qualcomm trading down here a little bit in the pre-market. Had some pressure on it yesterday as well. I know they have some suits going on with Apple. There's some
yeah, I was going to say that too, because Apple and Qualcomm have been in a battle here too. So interesting, we get the BlackBerry Qualcomm settlement here. You wonder what's going to happen with Apple Qualcomm. Everybody hates each other in this industry, it seems like. They all sue each other.
So let's see here. We're trading down in the pre-market. Looks like this 54 area, that could be an area of support. That was a start of a 4-day run in late January, early February, so keep an eye on $54. BlackBerry, haven't really taken a look at it much since it had an earnings report, which I know it got a little bit of a lift off. Looked like it was going to try and fill the gap here, but maybe not. It's not unhalted yet. But let's see, 820 has been the high of the move after earnings. Struggled at $8 after that. So we'll see where they take it. 820, those are levels I'm looking at. If not, your high from September was 846.
I'd be surprised if it didn't take out the 820, just because you're talking $4 billion market cap now, $800 million potentially if it's not appealed here, getting added on obviously because they're getting some cash here, and they need the cash too. So I think I wouldn't be surprised if this hit the mid eights, but we'll see what happens at 8:15 when it comes out of the halt. We'll come back to it and we'll take a look here. But with that, it's obviously worth a lot more to BlackBerry than it is to Qualcomm, as mentioned already. Let's go with the earnings reports here. There's just two major reports here from this morning. Delta is your big one here. DAL stock is trading up $1.21 here in the pre-market. They just reported earnings. Spencer, how'd they do?
Delta reported Q1 adjusted EPS of 77 cents. The GAAP EPS was 82 cents versus $1.21 in the same quarter last year. So a little bit of a miss year over year there. They report sales of $9.148 billion versus $9.251 billion year over year as well. So they missed that number. They reported Q2 they see Q2 passenger unit revenue up 1 to 3%.
Up 2.5% here. This stock's been downtrending for the last month. Lots of overhead supply I see up here, Joel. What are you seeing on the technicals? Any level jumping out at you?
Well, we'll just go with that pre-market high of 46.97. You had a high right there back in earlier in March, and then a couple just above it. So 47's the key for really continued upside. If somehow they decide they don't like this report, coming back on the downside, lower the move from yesterday at 44.49. You also hit that level back 44.47. So 44.50 to 47. Those are your solid numbers. We'll see how it trades here off this report.
You've got some of the other airlines trading up in sympathy here this morning. LUV is trading up about 50 cents. UAL is probably not. It has a little bit of a sympathy move here this morning. Obviously, it's got its own concerns with that passenger there. But one thing about UAL is it bounced back pretty hard yesterday. So they hit this thing down $2 right off the hop. Actually, fell over $3.50 right off the hop, and then it just came back and actually got 2/3 of those losses back. So actually, it didn't even end up closing in the red. It doesn't look like yesterday, UAL.
Yeah, UAL battled back. We were talking about this on the desk yesterday. I guess just an opportunity for the shorts. If you've been caught in this thing, what worse news are you going to get than the stuff coming from this CEO and the comments and everything what happened? But it did battle back yesterday, trading up in the pre-market. $72 looks like an area of resistance at your 2-day high in UAL.
Spencer, you were saying you could have been one of these passengers there yesterday on your flight back there. They almost bumped you.
Yeah, I actually did. I didn't have an assigned seat on the plane, and my plane was overbooked, and so I almost got bumped off. I wasn't allowed on the plane at first, and although I did, thanks to this, I did find out the actual procedures that the airlines need to follow if they're going to bump someone off their plane, which apparently weren't followed in the United case. But I was flying Delta.
You're not supposed to drag somebody out on their butt and
no,
make
they're
them
not.
all bloody and
no. But they called me up to the gate, and I got presented with my offer, a voucher for X amount of money, and then if I don't want that, I can get Y amount if I get a new plane by this time, or Z amount by that time, and it was all in writing, and I had to sign away my offer, my volunteering offer. I didn't want to volunteer my seat, so I had to wait. And thankfully, somebody else gave up their seat, and then I was like the last person on the plane.
Did they pick you like out of a hat, or how did they do it?
yeah, how's that work?
I didn't have an assigned seat in the
why?
I don't know. I don't know
who.
That? That's just the way I booked it. I don't know, and I don't know how they were determining who to call up and ask to volunteer. But I got called up, and I was like, I want to get on this plane.
Did you tell them who you were? That you are
No.
the producer of Benzinga's pre-market prep show?
No, I thought about taking it though. It was I got offered an $800 voucher. I thought about taking it, but then
You're gonna leave us for $800. You weren't gonna do our show.
No, I just would have been home later. But also, the one thing I'll say with United is obviously anybody who follows the markets could have predicted. It seemed to me at least that yesterday would have been a close higher. But the one thing I'm watching with this is obviously normally these PR nightmares don't last. But if you're reading about this Chinese boycott and people in China are furious over this. That I'd be watching for to see if this effect does linger going forward. But obviously,
do you really think it was a racist thing? I mean,
it doesn't
I think
matter.
it's probably
It doesn't
random.
matter what I think. It doesn't matter what I think. I
Yeah,
don't, but
true.
it doesn't matter what I think. So
Okay, so a couple things here. First of all, why in the hell are the airlines allowed to overbook? Because they're basically selling seats that aren't in existence, just banking on a couple people not showing up. That's the same thing as if, a concert hall had 20,000 seats and they sold 21 because they thought, maybe 1,000 people, might not show up that actually buy seats. I don't understand why, they're allowed to do that. Like, do you guys have any reasoning? Do you think, it just seems like they're just trying to sell revenue or drive revenue that shouldn't be driven.
I think it's just an airline seat is such a valuable commodity, right? There's such a limited supply, and it I don't know. I mean, I'm obviously don't.
I think they're just trying to make extra money. I don't know why you can sell a seat because you're getting okay. If the seats are all sold, then why can you sell more seats? Because those seats are still spoken for. I mean, even if the person doesn't show up, they're still getting paid. So I don't totally get why they're allowed to, overbook here. It's always kind of been a pet peeve of mine. I know they do it, but I guess they need that extra little bit of revenue. They needed it back in the day to survive, but a lot of these companies are doing very well here now. Obviously a lot of them are out of debt here now too, or significantly less debt than they did before because we had some restructuring and stuff. So I don't see why they need to overbook. I think that's where they need to start looking is why they're allowed to overbook. And Chad, if you guys know why, they're allowed to do this, I know 382 is saying 15% of people don't show up. Just because they don't show up, they're still paying for those tickets. If you buy a ticket on an airplane, you don't show up, you still pay for it.
Maybe we got an article on Benzinga today. There you go.
The one thing that I read a really good article in the Washington Post written by an aviation lawyer who basically said, if you think the airline does not have the right to drag you off the plane, you are sorely mistaken. Like in the name of security, especially in the world that we live in, if you really, the airlines are hypersensitive to this sort of thing. If you think they won't, obviously we just saw it happening, but if you think they won't drag you off the plane, kicking and screaming, you're wrong. They will do that. They will do that in a heartbeat.
Hey, the captain of an airplane has the same authority as a captain of a ship. They can throw you overboard anytime you want. And that line's been used on me. That's a long story. I won't share when that line was used on me before. But anyways, right. You said one other significant earnings.
Yeah, what was the other one, Dennis?
Fastenal, F-A-S-T. And the reason it's significant is because this is like the nuts and bolts of the construction industry. So when Fastenal misses, which they did here this morning, because the stock's trading down $2, you got to wonder how the construction's doing. So that's why I think Fastenal is significant. F-A-S-T.
Yep.
Spencer, tell us the results, then we'll jump into the details.
Well, the Q1 EPS was 46 cents. That was in line with the estimate. The sales 1.048 versus 1.04. So I mean, about the same on the sales number as well. I don't see if they had guidance.
Okay, stock trading down 4.5% here. It's getting hit pretty hard, so investors are nervous about something. Interesting, we always say when you go up through an area quickly, come down through that area quickly. Well, we went from 48 to 51 basically in a matter of a few minutes back on January the 18th. Now all of a sudden, boom, we're giving it right back, and we're actually just ticked under $48 there. So there's a little bit of error in the 48 handle is what I'm saying, between 48 and 49, and looks like it's trying to fill that error here this morning. But we know the buy the dippers lurk there, Joel. What do you think, seeing on the technicals on FAST?
Street leading the right way into this one. 5 sessions ago, you hit 52.74, and you just bottomed about, well, who knows if it's the bottom yet, pre-market trading. You just made a low at 47.67, and you can't really ignore the volume here. There is some shares being traded. I think if I was really trying to hold out for this for a short, attempting to cover a short here, I think they get to the 47. I mean, that was a low on the big run-up day. This was back in early January. I don't know if that was just market-related, but that just seems like a nice area if you get to 47. And then also 46. So using the half and whole numbers, of course, you need to follow through the pre-market low of 47.67.
Dr. J alerting us BlackBerry is open, and I did pretty good on my mid-8s call because this thing's at 867, 870 here right now. Ooh. I didn't see what the actual opening print was. Did you guys catch it? It flew by so fast.
I could get it here.
Go grab it. I'm just curious. Guy said 850. Well, I said mid-8.
840?
846, Dennis. You were off.
All right, in the ballpark. So you go to the market caps, you figure that stuff out. Anyways, 850 is where it's at. It's one that there's just so many people that are underwater. I don't know if it holds, and obviously, it could still get appealed here. I think, on the higher eights here, I think there's sellers all over the place, and obviously we just got up to the higher eights. So let's see what happens here, but it's trading very actively. Already 200,000 shares are traded here, basically in the opening bar just a minute ago. So big volume happening here, BBRY.
Yeah, and also you got a big whole number at $9. We haven't
Huge.
traded in $9 handles since January of 2016. So if you've been holding out for that, also 9 and 950. But a little bit of a pullback here. I don't know, place to buy it. That's going to be a little bit difficult. Got a long ways to fill the gap.
I want a place to sell it. Give me a place. You're thinking $9?
I'm just not in the selling mood today.
Just an opinion.
Yeah, $8.99 if you wanted. If there's some size up there at 9.
Okay, so Joel's giving you an opinion possibly. And obviously Nasdaq stock here, so we don't have a New York open book for this one. Although one day we will, because New York is going to start trading in Nasdaq stocks, which I'm excited for. So then we can get an open book on New York as well. But I don't see anything in the Nasdaq book at $9 here yet. But we might find out soon because they're not even going to get it on the level 1 quote because it's already at 885. So let's try to drive up to Joel's number. Jumping over here to other news.
Wait, well, Dennis, can we just stick with the earnings? We have a question from Wave Trader to discuss.
Sure.
There's only one more really to discuss today, and that's SJR. Shaw reported Q2 EPS 30 cents versus 22 cents, sales of 1.3 bill versus $986.5 million. So they blew the sales number away. Really the only other ratings earning to discuss this morning, SJR.
Yeah, stock getting a pop here in the pre-market. Bid pretty heavily at 21 and a quarter, 4,100 shares, and that's heavy for a stock that's only traded 400 shares this morning here. So you could say it's still price discovery mode, but I'll tell you, man, that double top up at 21.84, 21.79, looking back on February 22nd and February 23rd, that looms large for me because that is actually a 52-week high level as well. So call the whole level $22. I think major resistance up at 22.
Yeah, Dennis points out a good level there. Haven't quite yet reached it in the pre-market trading. 2170 print, 2160 last. I mean, the only thing about this one, and I haven't done my research yet on this Straight Path Communications, Dennis, that AT&T took out. Not sure where they're at, so I think right now anything with communications in it, after you see a triple premium paid by AT&T for it, I don't know. Room on the upside.
That day, a lot of these stocks got a pop, and that would have been, 2 days ago? I'm just trying to see on the charts here. Yeah, you can see the run up there, even in SJR. Sprint got a pop, but they all gave it back. So the pop didn't last long on a lot of these stocks and didn't last long on SJR either. But it's something to think about. I just think, you all of a sudden you get, stock that was just kind of hanging out here, range bound for a month and a half between 20 and a half and 21. All of a sudden's rallying $1. I think there's people who are willing to ring the register up there, and that's why I think I'd be one of them.
And also a whole number like 22 could be some size. Is this a New York stock? 22.
Yeah, it is.
Okay, so you can check that open book.
I'll go check your book for you. Go into the book. We see almost absolutely nothing. 2,000 shares at 22. Pretty small.
Okay.
But stock doesn't trade a lot of volume either. Okay, so I was jumping over to Whole Foods here, and this is interesting because we know you got Jana in there pushing for a sale. And then last night, breaking it on Bloomberg, you saw actually that Amazon was sniffing around here last year for Whole Foods. So that story was broke. They said they're not interested now, but they were sniffing around. And I think there was a couple other suitors. I think they said Kroger, Albertsons, also potential suitors here. So Whole Foods, where there's smoke, maybe there's some fire here. And Whole Foods getting a little more of a pop on that report there, Spencer. Is there any other details there, or did I get them pretty good?
I mean, you got it pretty good. I would just
say... I
took
your piece.
No, it's okay. I would say, can you imagine, though, if Amazon bought Whole Foods? Can you imagine, and they, even if they lower prices by teensy little bit, can you imagine that people wouldn't shop anywhere else?
Really?
People
turn into Amazon stores.
People
Amazon grocers.
Yeah.
I mean, if they're going to go groceries, if they're going to go physical stores, why build all these stores yourselves? Why not just go buy somebody? So I don't think, though, it says they're not interested now, so it sounds like, that they're not interested now. But still, maybe they're interested in somebody else too. Maybe, there's a lot of grocery stores that have been beat up pretty well. And, and you think if you want those physical stores, maybe they do buy somebody.
Whole Food.
Same day delivery, same day pickup, grocery stores. Oh man, I can't even.
I think that's what if I was Amazon, I think I'd buy one of those groceries. They're all beat up too. Like you're getting them all cheap. I mean, Kroger's been, like let's just look at Kroger. Not saying it. This is just pure speculation. Talking no rumors on this, but I mean, Kroger's $42 stock back in 2016, $29 now. Safeway or Super Value was a $9 stock. We talked about that yesterday. It's $4 stock here now. I mean, there's some cheap grocery stores out there.
Yeah, let's just take a look at the pre-marks in action in Whole Foods. You got a nice pop up to 35.50. Now, if I heard correctly, you said they were looking at it last year. So
Yeah. So this is just a rumor that just came out that they were sniffing around last year, and then they basically said they're not interested now. So that's why you're not seeing a huge lift in it. But I think just because there was, potential that Amazon was potentially interested, and you get the Amazon name, is probably why it's lifting.
I'll give 34.50 my number of the day in Whole Foods. Your 2-day high the day the Jenna Partners stake was announced, that was 34.66. You couldn't quite get there yesterday with the 34.38 high. You split those numbers. Let's call 34.50 that level. After that, whole number 35 even. Your pre-market high 35.50.
Just speaking of M&A, the time TIME, there was a small, or there was an article last night that it was getting closer with the deal here. I mean, this has been rumored forever with Meredith, MDP. So I think it was Bloomberg that was breaking that as well, if I'm not mistaken. And TIME is just kind of hanging out here. It's been rumored for a while that the takeout price is going to be 20. I mean, the stock when the rumors first started, I think was back at 16. You can see there a few months ago there. So I wouldn't be surprised here if we do get a deal here, but I think a lot of this premium is already baked in.
Is that Time Magazine?
Timing. They own Time Magazine. They
Time
own
everything.
They own
They own Time.
Sports Illustrated. They own Us Weekly. They own Forbes. No, Fortune, and a bunch of other magazines.
Not the clock company.
All right, 2040. That's been the recent high of the move. Big sellers, though, at 1950, 1960, really for the past month and a half.
Jumping over here, we're all over the place here this morning, but you were telling me on the pre-market show about Marriott and some bookings because of, we actually showed up with the travel ban here, Spencer. Give me those details again. What was said here and what the Marriott CEO was saying.
Well, there's a good article in the New York Post published overnight around 12:30 a.m. About actually getting Arne Sorensen, the CEO of Marriott, actually on the record. He said that he kind of quantified how the travel ban has affected business. So in February alone, bookings from the Middle East and North Africa, and mind you, these are a lot of high value, high net worth travelers. Bookings fell in February from those areas 30%, up to 30%. He said that at an investor day in March. We know that travel from those regions has fallen about 20% since the travel ban was signed. Basically, he came out and said this is not good, period, for business. So,
and obviously this is still a very small piece of overall revenue because you're only talking those countries that had the travel ban issued on them.
Yeah, you know what though? According to this is all from that same article. The travelers from these regions at these premier hotels, the ones in New York, the ones in DC, the premium locations, they might account for 10% of annual room revenue. So, these are not small potatoes. These are big travelers who spend millions of dollars when they travel.
Joel, talk the technicals here on Marriott. It's a stock that had a huge run up. Actually, it was a Trump stock, believe it or not, because it had the huge run up. And now it might, obviously, we can look from, it was $70 when Trump got elected, $95 it ran up to. And now it's been pulling back, maybe because of Trump's travel ban a little bit here. What are your thoughts technically as we trade at 91.40?
Well, you know I can go for a 50% retracement if we can manage to hold this 90 quarter and a low. 95.42 is what we hit on March 30th. We've had a 5-point drop, 2.5. That would take you up to 92.75. So that's if you can manage a bounce off this. But you know what? You're going to have some trouble here at just under $92. Double top 91.72, 91.73. So keeping an eye on that. Then you get into the 92 handle. The best case scenario for this would be, to take half of that back, hang out here 92.75, 93, and go back up to highs. But probably got some people stuck on this after that little 6-7 day tumble. But main number I'm looking at is 91.75.
Let's jump over to ratings land, and there's some interesting ones here this morning. I'm going to start with the big one, Lululemon, catching an upgrade at Stifel. They are upgrading the stock to buy. Stock is trading up a buck here in the pre-market. Nice lift for LU. It's been showing some life. We've been talking about the retailers showing life here the last couple of trading sessions. I'd say the last week, really. You can see Kohl's, Nordstrom, Macy's have all been showing some life here, even though Macy's still hanging out under 30, but it looks like it's winding up. Now you get LU with an upgrade here, taking out Tuesdays, or actually Friday's high, 52.69. Well, we're right there at Friday's high, 52.69 here, but it looks itching to go here too, and Stifel's got some pull. So what are you thinking here, Joel, technically speaking, as LU?
52.90. You go 52.69. That's your April 10th high.
I think we take it out today.
I go 52.90. 52.90 was the high of the day on the earnings debacle day. So you got to get that and then clear sailing ahead. You got a big gap to fill here above
Huge
50
gap.
Yeah, so get it into 53 handle. Shorts that didn't cover over the last 6-7 days are probably kicking themselves a little bit, especially if you had the double bottom at the 49.40 area. So a lot of room on the upside here. I would try and be a little more patient with this thing and wait for the next day or two. If I can get it in the lower 52s. I mean, you only need 52.33, yesterday's high, to fill the gap. So I'd be a little more comfortable trying to pick it up there.
Interesting one here. Pepsi getting upgraded at Susquehanna, and they're citing that they could be a target for Kraft Heinz. I don't know if I see that happening, but I'll tell you, PEP getting a little bit of a pop here in the pre-market. This is a conservative stock that really doesn't move very quickly. Obviously, you can see that from the trading range in the last 2 weeks, where it's basically been stuck in a 1-point range. Well, it's getting up towards the upper end of that range here this morning, Joel. 112.40 on the upgrade from Susquehanna.
Pepsi been in a trading range since March 21st between 111.41. You can go and count the lows at 111.40 to 111.50. Actually hit 111.35 yesterday, so you know where you want to buy it if, in fact, it comes back there. All-time high. That was hit just a few days ago on March 28th at 112.76, inching up there. Maybe a seller lurking up here at 113, but we'll see if we can break out of this long consolidation in PepsiCo.
Hewlett Packard upgraded at Citigroup here this morning. HPQ. We're talking not the HP, the HPQ. Stock just hanging out under 18 bucks. I don't see the size in the book, but I gotta assume there's something big and looming large at 18, especially when you see 3 highs. We go to your daily, see 3 highs in the last 2 weeks, right under $18, $17.94, $17.95, $17.96. I'd imagine that's the level it wants to push through, but it's going to get a running start at it here today and upgraded here, so maybe you can take out that 18. If it does, then you'd be in breakout mode for HPQ.
Yeah, taking you back to your January of 2015 high where you got a print at 1804. Major support is 17 if it goes into reverse, but I think Tommy Lackey would like this chart. And he'd tell you, look both ways at 18. If it holds 18, nice move on the upside. Getting a little bit of a running start. Let's see where they've taken it to in the pre-market action. Pre-market high, a little tick at 18, but I don't think that there was much volume there. Hanging out at 17.90.
One more upgrade I just want to talk about, then DC. We'll get to Hess for you. Hog, Harley Davidson getting upgraded at Raymond James here this morning, just to neutral, but stock is trading up 40 cents in the pre-market, and it's been showing some life there too. Had the big pop, kind of consolidated right at the big hole number of 60, and then the last 2-3 days has been lifting here, and we're lifting here again on Hog, HOG.
Nice comeback, pre-market action. This is what they're telling you in the pre-market. I see a spike to 62.95. Not sure. That might have been after hours yesterday. 62.60 pre-market high, but I'll give you one number here, and one number only. 63.40 has been the high of the move, so a target on the upside. Hog, nice comeback as of late. I think I remember seeing this thing in the 40s, correct? Yeah. lower 40s. So 63.40 high the move.
Just jumping over, DC want to know about Hess. So let's do some technicals on HES. Obviously, this moves with oil. Oil's trading slightly higher here in the pre-market, which is lifting some of your oil stocks here this morning. Hess is one, just like the other oil stocks, have been beat up over the course of the last month or two, but showing some life in the last week. I'd say even the last 2 weeks. So got down to $45. Now we're up here at 51, above $50 here. Technically speaking, what do you think on HES?
Let's take a look at. There's some news on this. No, I don't see any news. I see it trading a breakout level here. Former high of the move, 51.17, traded up to 51.45 in the pre-market. I'd like to see if this rally keeps on going. You got to take a look at the price action in the 52 handle. 52.02, your March 3rd high, but then a triple top at the 52 and a quarter level. Still a ways to go to get there, but looks like you may be finally getting off the mat here in HES.
Looking at another stock, this one's a small one. S. Straza wants to know about NAK. Joel, what are you thinking and seeing on the technicals on NAK?
NAK. Let's see here.
I do not follow this company, but I'm bringing
Northern
up the chart here
Dynasty.
right now.
Yep. This is these. Well, you don't want to really play these ones from the short side.
Speculative.
Yeah, very speculative. Let's see next. I mean, you could have a potential breakout above 150 here. 157. We're trading up 19 cents. Pre-market high got it popped to 183. I mean, this one, I definitely wouldn't want to short it. This is your kind of stock that trades some volume. Let's see, it traded 2.5 million yesterday. But this is a kind of, an Amex stock trading up. Not sure what the news is. I mean, this is the one, the institutions, the big funds, they could just get it going. Just come in, start buying.
You got to find one that wants to actually buy a dollar stock, though, and that's harder to do than
They could do it. They could do it with their, just with their, intraday capital. Buy 1 million
if they
shares.
want to do it is a bigger question, though.
Yeah.
I'm just not sure there's a lot of institutional action in a $1 stock on the Amex.
Okay. All right.
That's my argument.
Would you typically not cover a huge position after hours? That says Steve Stroud. I mean, if you want to show your hand, yeah. I mean, I think institutions are big players.
What did it do last night? Did it pop?
Yeah, popped up to $1.50. Got up over $1.80. I see it.
Yeah, sometimes you get things overdone. I'm not sure what the news was on this last night too. I don't know if you want to dig quickly, Spencer. It's a little $1.38 stock, so this is, obviously it's very speculative here. We're talking about a company with a market cap of, oh, there I just lost it. I had it in front of me. Market cap of 500 million.
All right,
So,
pre-market high 183. You just want to see it plow through that. You also had a high at 187. This was back in February. So you see your level, just get it through that pre-market high.
Saying there was something from the EPA allowing them to drill, and that's the catalyst. That's what Estraza is saying on it. Do not follow this company though, but about $1.50, it's a little bit in breakout mode. Below $1.50, I don't think I want any part of it.
Can we get a quick imbalance look before we call JC?
Yeah, sure. I'll just take a quick look and see what I see in imbalance land. Pretty small. Seeing some of the gold miners get bid up here this morning. Barrick 55,000 to buy. Gold Corp, which is GG, 49,000 to buy. So a couple of buy balances in the gold miners. It's not surprising with gold trading up a little bit this morning here. Man, they are so small. Institutions not showing their hand at 8:30 in the morning. I'm looking at most of these are like under 10,000 shares. I'm scrambling around to find anything significant here. And that's pretty much like GE 34,000 to sell,
Wow.
Coke 21,000 to sell. They're so small. These are just not even influential when they're this small yet. So let's take another look at 855. Maybe they'll grow a little bit, but as of right now, imbalance is not pushing the stocks around.
All right, 8:35. Time to grab JC Peretz, author of Lost Art Charts. We'll be back in a moment.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel, back in the producer's chair, and we're on the line with J.C. Peretz. He's the author of All-Star Charts. J.C., how you doing on this Wednesday morning?
I'm doing great. Thanks for having me on again. Love doing this.
Yeah, we love getting your takes here on the markets. Let's just go. I'm going to say the S&P 500. I don't want to get in any trouble, but you can use the S&P or some of the other U.S. indexes here. Just consolidating under all-time highs. Consolidation for another move higher. JC, what do you have for us?
You know, we've been real neutral over the past month, and I hate to be so, hands off. I know, I'd much rather be super bullish or bearish or kind of, have more, direction. But you gotta play the cards that you've been dealt, right? Not the cards that you want. And for the last month and change, really since last month, we've really been very neutral for the simple reason that just an overwhelming amount of sectors, stocks, and indexes have all hit our upside objectives, right? Because, last time I was on the show, had to have been last year. We've been super bearish, particularly super bullish, particularly since July, the beginning of July. But all of our objectives have been hit, right? So just because our objectives are hit doesn't mean we necessarily have to get short. But I think taking profits is the prudent thing to do, right? So then moving forward, the question is, okay, is this consolidation going to resolve higher, or is it going to resolve lower and it needs more time? And, right now I don't have the answer to that. We really just need to take the weight of the evidence. I think the first thing
JC,
is that this is still an uptrend. You hear me?
Yep.
Yeah, we lost you for 1 second, but you're back. Yeah, it is. I just want to go to backdrop on interest rates here. I know you were pretty firm in your convictions last year. We were going to see, an increase in rates. So far, the Fed has followed that path. But just of late, I mean, I'm looking at the TLT since this last move by the Fed. That's come off the lows. You've had gold, the silver rallying. I think that's due to a little bit of, international unrest, geopolitical risks here. Give us your current outlook for interest rates.
Well, remember, the Fed doesn't control interest rates. The market does. The Fed just follows along, right? If you look at interest rate history going back 100 years, the Fed is always late to the party. The market is the leader, right? So last year, well before the Fed did anything, rates were rallying really off those early July lows, well before any election, right? People like to talk about how the market stocks went up after the election or rates went up after the election. Both stocks and rates were both moving up substantially well before any election, U.S. or otherwise. Financials were already rallying, right? So all of that evidence was suggesting that rates were going to go higher into the end of the year. That's exactly what we saw. And now we've really been in a sideways, nasty range for the last, 4 months, 5 months or so. So at this point, it's similar to the S&P 500 question, right? Is this resolution going to be higher or lower? From what I see, I see speculators, historically short treasury bonds. And when you see that much, the sentiment is so skewed to one side, it's hard to think that rates are going to go up. I think I have to take the other side. If this 2.3% level on the 10-year breaks, I think we're probably going sub 2. And I had dinner the other night with some really, really smart people, and I told them that I thought rates were going lower, and they thought I was crazy. I did TV the other day, and I don't need to mention any names, but I said rates were going lower, and again, they thought it was such a bold call. So it just seems to me from a weight of the evidence as well as an anecdotal perspective that everybody just assumes rates are going to go higher when rates have really gone down for 4 months. So I think that continues, and bonds continue to see a bid.
JC, if you think interest rates are going lower, what do you think about the financials then? Let's talk the banks, the big ones here. We can jump into Bank America or Citigroup or JP Morgan. They've all come significantly off the highs when everybody had to own them at the beginning of March. Now they're sitting here. BAC is trading at 22.5. It was up at 25.5. It's a quiet 10% pullback here at BAC. What are your thoughts here on, let's start with Bank America?
I don't like any of them. I don't. I mean, listen, I couldn't have been more bullish financials last summer. I mean, pounding the table, buy them all, doesn't matter. Wells Fargo, Citigroup, Bank of America, JP Morgan, Goldman Sachs, they all look great. All the regional banks look great, rallying with interest rates, home run, there's no question. But our targets have been hit, right? So then one of the things that we want to look at is when you're seeing new highs in stocks, right? It's particularly in the indexes, or in this case, financials as a sector. What you want to see is the participation within that group expanding with upside momentum, right? So in other words, with each new high in the index, or in this case, the sector, you want more stocks showing bullish momentum, right? Essentially getting overbought in momentum. But what we saw at the early May highs, in the early March highs, was the opposite. We saw only a fraction of the amount of stocks in the case of financials participating with upside bullish momentum. We saw only a fraction of stocks in the Russell 3000 showing upside bullish momentum. We saw only a fraction of the S&P 1500 with stocks showing upside bullish momentum. Only a fraction of financials, right? So we're seeing breadth deteriorating underneath the surface in early March, which is one of the reasons we got so neutral. And until that corrects itself, I want nothing to do with these guys, right? Particularly in financials, which were the leader off of the summer lows. They were rallying well before any election, U.S. or otherwise, right? So they've been the leader since the beginning. We need them to continue to be the leader. And getting back to sentiment, you talk about the sell side coming into the new year. The sell side historically just wrong all the time, particularly at consensus. And they all thought that financials were going higher. Financials were the sector to buy coming into the new year, almost like if it was like a foregone conclusion. So, I'll take the other side of that. Banks are still not something we want to own, especially if interest rates break that 2.3% level in tens. Banks, we got to stay away from it. And, you asking me about silver and precious metals. That's dead money. That has been a horrible, horrible, horrible trade, whether you're long or short. And I still think it's a bad trade. And then you look at the silver hedgers position, right? The smart money, and they have one of the largest, or if not the largest short position of all time in silver. So do you want to fight the smartest money in the world? I'm going to go with no. You fade silver and gold here. I don't necessarily think you need to be short, but I certainly don't think you need to be you want to be buying this stuff at all.
One of your fans from the chat, Estraza here, he's saying at Short Summit, you were talking about the FTSE and making some good calls about it breaking out, talking Europe as well. Are you still bullish over in Europe, or are you looking neutral there too?
Again, the German DAX, our upside target was the 2015 highs.
Right.
That target has now been hit, right? So, no, I'm absolutely not bullish DAX. I think we continue to correct here. And, you can make a similar argument for Canada, right? Our target was the late 2014 highs, and that was hit, right? So all of these objectives being hit simultaneously in some of the most important markets in the world, right? S&P 500, German DAX, Canada, India, right? So when you have all of these major indexes achieving your upside objectives and then momentum rolling over underneath the surface, I don't think it's time to be stepping on the gas. That time was last summer, and there will be another time, but I don't think that's today. So, I hate to be so neutral, right, guys? But you want me to be honest with you, right?
I don't mind neutral. I mean, neutral is a trading position as well. Sitting on your hands is sometimes, the best thing to do, obviously until you've got, the right pitch to hit. And if you're not seeing it there, then I stay on the sidelines as well. So I think neutral is a position.
It's not there. I don't think it's not there right now. It hasn't been there in over a month. And if you've been trading aggressively, chances are you've been whipped around. So, I think backing off has been the right call. And I still think it is. I don't think you need to be overly bullish. I don't think you need to be overly bearish. I think large cash positions has been the prudent thing to do over the past month. I still think it is. I mean, that's from the bottom of my heart, guys.
All right, staying in the interest rate sensitive area, Rob Hood wants to know, what do you see a scenario where REITs start to trend higher?
I think it's a great. And look at my Twitter from yesterday. I put up a chart of regional banks relative to real estate investment trusts. So in other words, regionals versus REITs, that ratio is very highly correlated with the U.S. 10-year yield. Just go to my stream from yesterday. I can send it to you guys if you'd like also. But that ratio is the one we want to watch. And the fact that REITs have been outperforming regional banks, to me, suggests that money is flowing to being positioned to take advantage of lower interest rates, not higher interest rates. That ratio bottomed right around July 4th last year and was the perfect leading indicator. You know, people talk about Trump rally and they make up all these things for why interest rates going up. Interest rates were going up well before the election. This ratio was exploding higher for months, well before any U.S. election, telling us interest rates were going higher. But again, that has now changed, right? So the fact that REITs are outperforming regional banks as opposed to the opposite, to me, is suggesting that the smart money is being positioned to take advantage of lower rates. So, you know, Rob Hood asked me about REITs. It's not so much REITs on their own, but relative to regional banks that I'm more interested in. So I hope that answers your question.
Yeah, great answer, JC. Just two final questions here. Let's just talk about, I mean, everything you're talking to is related to the U.S. dollar here. Interest rates going up, supposed to be good for the dollar. It had a nice rally. Give us your outlook for the U.S. dollar.
I'd love to. And just to push back on you regarding interest rates and the dollar going up, that isn't true at all. You know, there's this misconception, I don't know who made that up, that U.S. interest rates and the U.S. dollar need to move together. History has proven that is just wrong. That's never been the case at all. Interest rates can go up while the dollar goes down. Interest rates can go up with the dollar, or they can have zero correlation. So my suggestion to be throw that myth out the window. That is just wrong, right? History has proven that. I think if you want to buy dollars, buy dollars. If you want to short bonds, short bonds. But I don't think doing one because of the other, it really makes any sense. And getting back to the dollar's in an uptrend. You know, I think if we're above 100 in the U.S. dollar index, I think we're going higher in the U.S. dollar if we're above 100, and that has nothing to do with interest rates, right? I don't think one has anything to do with the other. I think if you think rates are going higher and you want to be shorting bonds, by all means do it. But don't do it because you think the dollar is going to make a certain move, right? So I think that you need to take a step back, specifically in the case of the dollar, and look at the monster breakout, right? We're talking about a decade-long base that broke out in 2014, right? This was a huge, huge base. So I think that the primary trend here is still up, and it's hard to fight that, right? If the primary trend is up, you got to err on the side of an upside resolution to this consolidation. I mean, it's just the way it is, right? So I think you keep the two separate would be my advice.
Downward Dog wants to know about DBA, which is your Power Shares Agriculture Fund here. JC, DBA, what are your technical thoughts?
You know, I mean, this thing's a real piece of crap is really what it is.
I love that how JC never sugarcoats
it. Listen, we have stocks just off all-time highs. We have indexes near all-time highs. And then you got this thing, which is basically hit an all-time low last week. So, you know, as much as I watch this thing, you know, I've looked for bottoms. You know, we caught that trade early last year, the rally into the early summer, and it's just been a disaster ever since. So to be honest with you, I think you stay away. You let it continue to consolidate. I mean, this thing's it's garbage. I mean, there's no way around it. It's garbage.
All right, I'm going to stick one more in here on you. We have Beppy59. They saw your recent article on India. Investing in the ETFs or individual stocks. Give us your outlook on India.
You know, this is a market that I'm fascinated by. I mean, guys, like from the bottom of my heart, I'm fascinated by the culture. I'm fascinated by the growth of the country. I'm fascinated by the internals, right? The drivers, the fact that the media stocks in India are breaking out to all-time highs, both on a relative basis and on their own. You know, I find that so interesting. So, you know, you want to talk about a very unique part of the world that I think has, great growth potential. I think that that's a place that we need to be looking at. I guess you're asking me about an ETF or individual stocks. I think it's bigger than that. I think it's the fact that the rupee is breaking out of a monster base, the fact that the Nifty is breaking out to all-time highs, and the fact that the Nifty Bank Index is so highly correlated with Nifty itself. I mean, you want to talk about strength in emerging markets. I mean, this is where the strength is. Forget China, forget Brazil and Russia. India seems to be where it's at. So, if you want to be in an ETF, something like an EPI has absolutely exploded. It's up 30% just in the last few months. So, I think it's certainly due for a pullback. But I think bigger picture, this is just a market that I think that we're going to be talking about a lot more in 5 to 10 years, or even 5 years. But as an investor, I think that we need to be focused in there now. As a matter of fact, guys, I'm glad you brought it up. We're about to launch All-Star Charts India, which is our, the first, real concentration in a country outside of the United States, which, as you guys know, I've always been very globally oriented anyway, but I just find that there's so much opportunity in this country that we're going to be rolling out the new All-Star Charts India in the next couple of weeks, and we're super excited about it.
Looking forward to that. J.C. Peretz, author of All-Star Charts, not only giving us a look at the charts, but giving us his fundamental basis for his trading decisions. Great interview as always, JC, and we're going to track you down again soon. I know you got a busy travel schedule, but surely like to have you back on again soon.
Anytime. Just give me a heads up. I'm in.
All right, thank you. J.C. Peretz, S&P's trading down 3.50, 2347.50. Des, I'd just like to make just one point, which J.C. stressed on a couple different occasions. It hit an upside target, right? Doesn't necessarily mean that it's a short, right? Just sitting in the market, observing the action, and I think that that's sometimes where traders/investors have to get involved. If you're not long, you're short. If you're not short, you're long. And sometimes the consolidation periods. I mean, what more can I tell you? Look at Pepsi. I mean, look at the consolidation. You trying to trade a big move here, you're going to get smoked. But are we primed for a breakout based on the news or a breakdown? So consolidation.
I mean, trading, it's a great point JC made, and that you're reiterating here, is that you don't have to swing at every pitch. I think a lot of my best trades are sometimes trades that I don't make at all. If you're just wishy-washy, not feeling, you don't have to buy, you don't have to short. You can sit on your hands and you can sit back, and wait for your setup. When you've got your setup, that's when you strike. That's the Warren Buffett approach to investing, obviously way different than trading. But, Warren Buffett is the one that's always said, you don't have to swing at every pitch. He wants all his ducks lined up in a row. JC's technical trader, and he wants his ducks lined up as well. And he's not going to strike, if there's nothing there. So neutral is a trading position. Just sitting back and relaxing and waiting for your setup is sometimes the best thing to do. So great point by JC there. And, I agree with him. And a lot of times the best trades I make are the trades I don't make.
All right, Tom, I just want to give you a quick update here on BlackBerry, and we got over $9 here.
Barely, though. We got the level pretty good, called it. 904.
Yep.
$9. We're talking 9. Me and Joel were saying 9 resistance, 904. It's right there. I still think that remains major resistance here today.
Right. I mean, if you're trading it too, for a scalp, obviously here you pulled back a dime. But I think another thing that's kind of impressive here is, you got over 9 and you haven't backed off that much, just into the 880 handle. Maybe some short scrambling for cover here, but that's your big mover of the day. It looks like BlackBerry trading up here 16% in pre-market trading.
What I want to say is, how many times have we come in to see BlackBerry trading up, 16, 20% on a good earnings report or a good news article, or winning a lawsuit here? We've seen it happen a lot of times where it's trading in the pre-market up 15, 20%, and then by the end of the day, it's almost given it all back. I go with the trend as your friend, and the trend for BlackBerry has always been to fade pops, and that's why I look at this thing up here at 892 today. It's winning a lawsuit. That's going to give it some extra cash here, but, does this make the business more fundamentally sound? I don't know. I don't think so. So that's why I look at it here, and I think this is a little bit of an overnight windfall for BlackBerry and for BlackBerry shareholders, and I think when the real money comes in at 930, I think they're going to ring the register, and that's why I don't like it up here in the higher 8s.
All right, let's just take a look here. 4 down War Dog. We have an issue I've never even heard of. Black Line Inc.
The
Big
symbol.
ol' yeah, BL.
What? BL.
Yeah, big ol' move yesterday here. Let me see if I can see
Oh, it's
any.
a new one.
Yeah, this is a new one. Downward Dog's good with this. Boy, I see no news on it yesterday. But you got a real nice pop here. Unfortunately, you backed off that 32.78 level, so we'll see if we can gather some momentum, get back up there, or if buyers stay, are just tepid here and wait for a pullback to 30. The volume, this is not a big volume stock, but it traded 140,000 yesterday, 400,000 yesterday. So just keeping an eye on that close at 31.50. Longer it stays green, the better chance gets up to test that 32.78. That also was a new all-time high in the issue.
I know absolutely nothing fundamentally about this issue. All I can say is you're right. Yesterday was a little bit of a breakout. You know how I like my 2-day move. So if for whatever reason you can get some follow through here, get up over the 32.78 level, it's in breakout mode there again. So I wouldn't be surprised if we challenge the 32.78 at least. So 31.50, I'm a little more bullish than bearish this stock. But that being said, I don't know anything about this company.
All right, let's see here. We are getting near the end of the show. You want
I'll give you a quick imbalance look here because they got bigger. So at least we got something to talk about here now. Bank of America 100,000 to sell. You can start to see some separation happening here in the pre-market. Financials are starting to look a little bit weaker here. So you got JP Morgan, Citi, Bank of America, Morgan, and Goldman and Wells all trading not significantly in the red, but slightly down. Most of them down about 0.5%. General Electric, 146,000 to sell. You want to talk about a trading range here. GE has just been stuck, and I mean stuck for 2 months. It's been stuck between $29.50 and $30.50. We're sitting right in the middle here at $30. Talk about a sit-on-hands trade right in the middle of a dollar trading range here. This one's probably one of those SOH trades, sit-on-hands. Just a couple other ones here. The gold miners still with some buying balances. Barrick, 78,000 to buy, and Goldcorp, 50,000 to buy. Looking over, the other ones are pretty small. I'm seeing Ford, 60,000 to buy. Nothing else jumping out to me, Joel. Pretty small. Visa, 30,000 to buy.
Spetch, a couple more issues you want to follow here?
I just wanted to bring up NBIX, big winner of the day this morning. They got the FDA approval for their Ingrezza drug on Tuesday. Then we're also hearing that BMO is out positive on the company. Says that, coupled with other catalysts, opens the pathway for greater than a stock worth more than $100 per share.
Ooh, boy, better get in there.
NBIX, that is. And then also want to just alert traders to this headline: NVIDIA. Goldman
quarter and then NVIDIA jar.
Yeah, right. Goldman reiterated their conviction buy last night, and their price target of $130. So watch for those two.
So they're bullish NVIDIA and they're bearish AMD. Interesting.
That is interesting.
Yeah.
Because those two stocks tend to move together.
Yeah. Okay, this NBIX, I mean, we got a nice pop-up here to 51.89, but you know what? We haven't really backed off. Still trading at 51.60. I think I'd try and stay with that. It breaks $50. That's been the low after you made that high at 51.89. I mean, if you want to get really excited on this and you want to look at the monthlies, 54.91. That was your high in November of 2016. Did have a little problems before in the $50 handle, and that was at 51.5. 51.45 was your November 2016 high. Okay, Spencer, right on the nose, 9 o'clock. You want to wrap things up and preview things for the final show of the week?
Yep, final show of the week. On tomorrow's show, we have our guest, Alan Ellman. You can find him on his site, thebluecollarinvestor.com. We're going to talk about his trading and how he goes about looking at the market. So that's on the docket for tomorrow. Plus, we have, of course, the big bank earnings and the start of the Q2 earnings season. So that's on the docket for Thursday. Hope you enjoyed our show today and our chat with JC. He gave some, I thought, some really, really good answers on some of those questions. I liked what he said about India. I liked what he said about the REITs versus the banks. So prop to JC. That was a fantastic interview. Hope you enjoyed that as much as I did. Hope you enjoyed our whole show, and we'll be back with you folks tomorrow. Please remember that all the information, material, and content is for informational purposes only and not meant to be investing advice. Have a good rest of your day. We'll see you folks on Thursday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.